Good afternoon. This is Tom Alexander. It is Sunday, October 13th. It is about 2 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly update that I do that is free, that I send out to those of you that are on my subscription list. If you're finding me on YouTube, you're not on that list and you're not getting notified, just shoot me an email at tom@alexandertrading.com and say, put me on the list. I'll put you on the list. I don't sell lists. I don't spam you constantly with stuff. And that's that. Now, if you would like other reports, let me show you where you can go to get that. You can go to alexandertrading.com, click on weekly update. It's free, and you can go back, I don't know, farther than you're going to want to go back and look at previous reports, see what I said, and then you can look forward and see what happened in the market. And you can judge for yourself the utility of my work for you. Okay, let's talk about the stock market. Now, we are coming into the home stretch of this election cycle. November 5th is the U.S. election, presidential election, and then other congressional races as well. Things, who knows what's going to happen? I don't know. No one knows. But this is a wonderful opportunity for me to remind myself and remind you to keep your eye on the ball. And what is the ball? Well, the ball is price action. We trade price. We are dependent on price movement for our profits or our losses. And, the macro stuff, the technical stuff, the magical indicator stuff, the magic number stuff, none of that stuff ultimately matters. What matters is what price does. There are different ways you can view price. I view price through the lens of auction market principles. I won't get into the weeds of that, but it basically is a guideline, a structure of how auction markets work. So, to put it in its simplest terms and in most util terms, if the market is making higher highs and higher lows, you want to be favoring longs. If it's making lower lows and lower highs, you want to be favoring shorts. Now, if you're rolling your eyes at that, I don't blame you, but the reality is that's how it works. And there is nothing you have or that you've ever heard of or will ever hear of that's more objective than that, or more accurate for that matter. All the magic numbers you're going to, we're new all-time highs and several of the indices. I'm going to go through the primary U.S. indices one by one in just a minute, but you're going to have people coming out of the woodwork because we're at new all-time highs in some of these indices, trying to pick the top using all sorts of arcane techniques and magic numbers and Fibonacci extensions and Gann lines and astrological formations and all of the above. And you know what? If somebody nails it, that's great. I'll be in plenty soon just by following price, just by letting price confirm that projection. And in the meantime, I'm not going to lose a small fortune fighting the obvious trend. Sometimes the trend isn't obvious, but it does always clear up, and it will always establish a pattern of either higher highs and higher lows, or lower lows and lower lower highs. And right now we have higher highs and higher lows across the board. Let's take a look at each one. Let's start with the SPX. Now, obviously, these levels can be translated over into the futures markets. I trade futures. I trade ETFs, options, all of the above. And you can use this work to trade the auction market concepts to trade anything that you trade. So clearly, this is the SPX. This is the midsummer high, June 16th high. And this level proved difficult to get through. We had the decline, then we bungee jumped very close to it, another decline. We came up, looked like we were going to rally. We came back and tested it. Now we have tested this level. Now I did a special report. I think it was last Thursday. If you haven't seen that, you can go to the website and look at it. Go to the weekend updates, and it's last Tuesday, or I think it was last Thursday. And I said, okay, I think we're in a binary situation here from a structural as well as technical perspective, and I think the market's going to move sharply one way or the other. Well, it appears that that's going to be up. There is no level above Friday's print high in the SPX that is quote unquote resistance. It's the SPX is going where no index has gone before. Now, to the downside, it's quite simple. It's basically Friday's low, and then below that, it's this around this 56.75 level. That is the low of this balance area. It also represents a test of this breakout level that you see here. So these are your two immediately important levels. The trend is higher until this trend is broken. You can see it's really, really clear. We're making higher highs and higher lows. Okay, let's go to the Dow. The Dow is also in new all-time high ground. The NDX is lagging a bit, but it looks like it is getting ready to launch into its old all-time high and set new all-time highs. That would not surprise me a bit. And then the Russell is doing the Russell things, which is it's lagging. It's all over the place. Had a huge update on Friday, however. So everything was in sync on Friday to the upside. Where's the New York Composite, the broadest of these indices? Huge update on Friday. So everything was in sync. All four of the primary indices, everything was being bought on Friday. That is a net bullish sign. Several of the major indices are in new all-time highs. That's a net bullish sign. So there are things here that are bullish. I can't find anything bearish. Let's take a look at an internal situation. Now, this is landed on breadth here. The red is the 10-day moving average of NYSE advancing issues. The green is the 5-day moving average of NYSE advancing issues. And this stuff is sort of a blunt instrument. I've said many, many times before, it cannot be road traded. It can help give some insight into current market condition. The 10-day and the 5-day moving average contracted quite dramatically considering how little price retracement we had, and now they've turned back up. Now, again, this is entirely dependent on what the market does or doesn't do, but it's certainly nowhere near an extreme. And the bullish interpretation of this is there is a lot of room to go to the upside in terms of breadth expansion before it gets to an extreme, before you start getting concerned about some sort of short-term pause or pullback or balance area / consolidation forming like we've seen, like we see appear to be coming out of. And then this is more vexing to me. This is VIX, and VIX remains above 20. VIX, the 10-day exponential moving average of VIX is as high as it was back in October of 2023, following or right at the trough of a 10+% decline. It is greater than it was at the trough of this decline, which is about 5.5%, and it's greater than it was in this most recent little dip here of about 4.3%. But I mean, what does this mean? Well, the obvious thing is it's a measure of option pricing, and it puts a relatively expensive. It typically means the market is nervous, and it could be, the obvious is to say, well, gee, Tom, of course it is because we have the election. Well, if you go back and you look at prior elections around this time, VIX may have been slightly higher than what it had been, but not like we're seeing now with the market rallying as strongly as it has been rallying, and it has been rallying immediately, and VIX is hovering around this 20+ area. Now, again, you could say, well, gee, this is super bearish and I'm going to get short. Well, I would advise you to let the market begin to make lower lows and lower highs in some time frame, a 30-minute chart, a 5-minute chart, before you decide that this is the magic answer and you're going to be the one that sells the top of the bull market. So, but it is a concern, and the bullish interpretation of this is that if VIX begins to drop, it certainly has a long way to go to even get back to recent relatively low, quote unquote, low levels, even around the 15 level, which is historically elevated, by the way. So that could also fuel further advance in this market. Let me show you one other thing, and this also involves breadth. Now, this is a 30-minute chart. This is breadth below this 30-minute chart. And it is a bull trend signature. When you have breadth, when it contracts down around this negative 1200 or lower area, when it immediately forms lows. And it has been doing that now for weeks. The last time we had something resembling a retracement began back in the middle of July, as I showed that on the daily chart, culminating in this low here. Of one of these days, we will see breadth get to this level, and then you'll get a very tepid bounce, and it'll just go lower, and you won't see breadth expand to the levels that we're seeing it expand to. And again, this is not something that can be road traded. It is something that can help you identify market condition. It can give you a heads up. It can help you with money management and how much you want to press a position, or if you want to take partial profits and things like that are outside the scope of this particular update. So guys, I hope you found value in this. And again, I would very much appreciate it if you did find value. If you would like and subscribe, enjoy the rest of your weekend. I will be in touch.